Campus Activewear, the largest sports and athleisure footwear brand in the country, both in terms of value and volume, is coming out with an IPO. IPO comes few months after successful IPO by another footwear brand, Metro Brands. This is the first public issue of this fiscal and it comes with new SEBI norms for HNI investors and thus will be closely watched. The Campus Activewear IPO opens on 26th April and closes on 28th April. The issue size is about 1,400 crores. Bid lot is 51 shares. Price at the upper end of the band is rupees 292. 50% is reserved for QIB. In the HNI portion, there are two categories. 5% is for 2 to 10 lakh category and 10% is reserved for those applying for more than 10 lakhs. 35% of the net offer is reserved for retail and about 3.3 lakh applications will be required for one-time subscription of the retail quota. In HNI category 1, the lot size is 714 shares and about 3350 applications are required for one-time subscription of this quota. For HNIs more than 10 lakhs, very few applications, about 1400 are needed at the minimum application size to get the subscription and the size is 3468 shares. Campus Activewear is one of the key players in the organized sports and casual footwear sector in India. Its flagship brand Campus has gained traction in the recent years and has emerged as the largest domestic sports and casual footwear brand in India and is competing with multinationals. The company is primarily engaged in manufacturing, distribution and sales of sports and athleisure footwear products. It has a strong focus on this segment and has resisted moving into other related segments. Campus has an expensive pan-India reach that has enabled it to sell about 1.37 crore pairs of shoes or footwear in the 9 months ended December 31st, 2021. The product portfolio of the company is extensive with more than 1400 active styles for men, 241 active styles for women, 485 active styles for kids. Thus it's clear that there is more focus on men category than the other two categories. Campus has 5 manufacturing facilities across India. This is in contrast to many other large players like Bata who get most of their things done from outside, and it has an installed annual capacity for 28.8 million pair of shoes. Campus Activewear IPO got a good response from the anchor investors and it raised 418 crores from 32 anchor investors, which consisted anchor investors like Abu Dhabi Investment Authority, Fidelity Funds, Nomura, Spring Investments, HSBC Global Investments, Ashoka India Equity Fund, and very good domestic investors like Ask Investments, HDFC Bank, HDFC Life, HDFC Mutual Fund, SBI Life Insurance, Authum Investments, etc. Now if we look at the financials of the company has done very well in the 9-month period ended December 31st. The company's operations suffered in FY21 due to COVID, but company has bounced back very strongly and has reported a very good revenue growth. The EBITDA margins of the company have been improving steadily. Return of net worth is also very impressive. On the post IPO equity of 152 crores and a face value of rupees 5, the TTM PE comes to 92.95, which is not cheap, but considering the growth of the company company may be able to justify such high valuations. The promoters of the company are Shri Hari Krishna Agarwal and Nikhil Agarwal. Shri Hari Krishna Agarwal founded Action brand in 1983, which was one of the first Indian brands which gained good traction. Drawing on his deep insight in this area and in the footwear industry, he later curated the Campus brand. The issue is entirely an offer for sale. 60% of the issue is by PE fund TPG, whose stake will come down from 17% to 8%. 26% of the total issue is by promoters, and their stake will come down from 78% to 74%. 13% of the issue is by QRG Enterprises, which happen to be promoters of Havel. Their stake will come down from 8% to 4%. Campus IPO offer constitutes 15.76% of the post-issue equity. Campus is the only Indian brand to compete successfully in a field which is dominated by international brands. The company has a strong presence in men's category with over 80% sales contribution coming from this category in the last 3 years. The offer is an offer for sale of equity shares by the selling shareholders. In contrast to many other players, Campus has a coverage of 85% of the total addressable market for sports and athleisure footwear in the country. It has a good presence right from the entry level, that is less than 1000 rupees, to semi-premium level, that is 1000 rupees to 1500, as well as in the premium range of 1500 to 3000. It has also a small presence in premium plus range of 3000 plus. 3000 plus segment is dominated by multinationals, but forms only 15% of the total addressable market share. Some concerns and risk factors about this IPO. The company may fail to effectively promote or develop the brand since there is intense competition, including many multinationals. It may not be able to anticipate the product trends and consumer preferences which change rapidly, and thus may fail to compete effectively in this highly competitive sports and athleisure footwear industry. There may be pricing pressures from customers as well as from other players. There could be problems due to ongoing COVID-19 pandemic, and there can be adverse development at its manufacturing facilities which may include labor problems, strikes, etc. Further, the company faces competition from organized and unorganized sector. Now let's have a look at the major brands operating in the country from a revenue perspective for the last 3 years. Out of 8 major brands in this field, 6 are international brands and only 2 are Indian, that is Campus and Sparks by Relaxo. If we see over the years, Campus has grown its revenue quite well. The growth is even more in 9 months ended 2021 December, but we have not represented the figures here. If we have a look at compounded annual growth from FY19 to 21, Campus stands apart from all others with a positive growth of 10%, whereas some have exhibited negative growth due to COVID. Puma comes second with a 4% growth. In terms of volumes also, Campus scores over others, and its volumes have grown over the years. Comparing Campus with peers on return on capital employed basis, we find that Campus compares favorably with the top end brands Bata and Relaxo. with a 20% ROCE reported in FY21 against a negative return on capital employed reported by Bata and 23% reported by Relaxo. Thus, overall, Campus has done a good job of deploying its fund and generating returns on. Another comparison with listed peers based on sales earnings of these listed peers shows that we have two types of players. One is players like Bata, Relaxo, Metro, who are quoting at a higher PE ratio. They are fancied by the market. In fact, Bata is at 256 PE, Relaxo is at 101 PE, Metro is at 84 PE, Campus is coming at a PE of 94. So, though it's not cheap, but it's in the middle of the road. Then we have other players like Khadim and Mirza International, which are operating at the lower end. This also depends on the product mix of the players and their operating margins. Campus has restricted itself to Activewear, whereas the other players are operating in different fields. Overall assessment, India is likely to see good growth in sports and athleisure segment. It may outpace the global growth rate as well the indications available, and this segment is expected to grow 16% by FY 2025. Footwear industry in the country has grown at a CAGR of 9%, and further with COVID and GST, there is a trend towards organized footwear retail. Campus is the fastest growing scaled sports and athleisure footwear brand. Campus offers multiple choices across styles, color palettes, price points, and an attractive product value proposition. The company had a 15% market share in the branded sports and athleisure footwear industry in the country by value for fiscal 2020, which has further increased to a figure of 17% in fiscal 2021. And there may be a slight increase also thereafter. The company has embarked on online D2C sales, direct to customer sales, which were mainly driven by the impact of COVID. And this has contributed handsomely to company's revenues. Merely from 17 crores revenue in FY19, these sales have grown to a whopping 272 crores in 9 months ended FY22. The company has in place a robust omni-channel sales and distribution network. 60% of the sales is coming from distributors, 5% from exclusive business outlets, and 35% is now coming from direct to consumer segments where there is a higher margin. Due to this, average selling price of the company is up 13% in 9 months ended December 2021. It stands now at rupees 615, up from rupees 546. Thus, the company is moving towards better premium products with better prices, with its focus on exclusive business outlets and direct to customer sales. The company is maintaining a healthy debt ratio of 0.43 for 9 months ended December 2021. It's very encouraging to see that company introduces a lot of new products every year, and new products account 50 to 60% of the revenue of the company. Promoters have indicated that they may not dilute their holding in the near future. This bodes well for the share. The company generates about 125 crores of cash annually, which can take care of its capex, which may not be needed given the fact that the company is still operating at about 60% capacity utilization. The TTM EPS on the post-issue equity works out to be 3.1 and the offer price of 292, PE works out to be 92.95. So though the values are stretched, Campus has a strong business model and it may witness aggressive growth, which we saw in first 9 months, and this could lead to justification of these premium valuations and even get some returns for the stakeholders. Campus Activewear IPO, you apply or not? Risk in this IPO is low or quite low. Expected reward is good to moderate. There is a very low chance of some loss if markets are too bearish. There are reasonable chances that there will be listing gains. To me, the issue looks good to me because they have built a very good brand and things seems to be in place with a good management, having shown good growth. So I may hold it for medium to long term. The subscription to the IPO is expected to be quite good. One has to watch for the new norms of SEBI related to HNI, whereby now we won't be getting very large HNI applications, and so HNI portion subscription may not reach the levels we have seen in earlier IPOs. I am likely to apply in this IPO. These are my views only. Please do your diligence. Thank you. Please have a look at the disclaimer.